Good afternoon, ladies and gentlemen. Welcome to the last half an hour show of today's daily coverage on markets. What seems to be at the moment is a bit of weakness that has crept into the Nifty. At the moment, 22,774, 140 points down. Again, the test of the 22,800 in level on the index continues. Should it hold, should the market close above 22,800, this will be conclusive proof that some amount of sanity has returned, at a 14% correction on the index from all-time highs, as also the fact that over the last 10 odd days we've made very serious efforts to defend 22,800 on the Nifty. Now let's get into the internals of the market. At about 3 p.m. you have 850 advances versus 1600 declines. So it's favoring bears in the ratio of 1:2. We track 19 indices for you. Out of 19, 18 are in the red. The lone index, which is in the green, is the metals index, 1% higher, 85.96. Let's look at the pain points. Heavy profit booking continues in the pharma space. The index itself down 1.8%. Mid caps and small caps continue to remain under stress. The Nifty mid cap select index is down 1.5%. The mid cap 100 index is down 1.2%, and the small cap index has lost about 0.5%. In terms of the Nifty, the advanced decline is 15:35. What are the shares that are on top as far as the markets are concerned on the long side? Let's take a deep dive into what the markets are telling us. In terms of most active counters, you have profit booking in M&M on this impending or perhaps expected entry of Tesla in the electric vehicles segment. Remember, Mahindra & Mahindra has been one of the very few outperformers that the market has seen over the last 1 year or so. When you look at the month to date return on Mahindra & Mahindra, it's down 10%. But if you look at how the stock has appreciated over the last 1 year, it shows at least a 30-35% uptick despite the weakness that we are seeing broadly. So apart from Mahindra & Mahindra, there are interesting stocks on the NSE 500 that are showing a fairly serious traction. Let's look at the most top gainers as far as the BSE 500 is concerned. When you look at today's trade, you have JSW Infra and JSW Energy up 9% as well as 5.5% respectively. There is move coming into metals, and therefore NMDC Steel Limited is up 4.7% at 39 rupees 10 paisa. Maharashtra Seamless is up 4% at 671. You have National Aluminium being the top F&O gainer in the metal space as well, 3.5% higher at 200. And then of course you have some market favorites such as Ireda up 3% at 179. So some part of the market is doing pretty well, including erstwhile market favorites such as Hudco and Ireda. There is a green tick on Cochin Shipyard. Barmer Lorry is up about 1.3%, but large chunks of the market remain under selling pressure. Look at the power space. Again, as we all are experiencing in North and West India, the summer is upon us early, and that's the reason why you see power producers being in top demand. Look at JSW Energy up 5%. Look at how NTPC is moving. Let me just give you an idea about how over the last 1 week or so these power producers have gone up. JSW Energy is up 13%. You have NHPC in the last 5 sessions gaining 8.9%. NTPC is again up 8.8%. Suzlon up 7.5%. Tata Power up 6.2%. and Torrent Power adding about 3.5% respectively. We'll go to Gaurav Dua, Head of Capital Markets Strategy at Mirei Sher Khan Asset Management. Namaste Gaurav ji, and a very warm welcome to you. Sir, how do you see the power space? As I was just telling our audience, at least in North India, the summer is with us fairly quickly. What is your expectation of power demand, and any favorites here within Mirai Asset Sher Khan.
Yeah, sure. I mean, the summer has started early this year. It was not expected that, middle of the Feb, you will start seeing this kind of heat. Now, this is good news for the power stocks. Obviously, power grid, NTPC have also come down sharply. Dividend yields are also very, very interesting at these levels. Another way to play this is to
Yes.
play through the durable companies. There is Voltas, Blue Star, Symphony kind of stocks, which I think could do well. And lastly, there are these contract manufacturing or the EMS players who are manufacturing for these AC players, which is like PG Electroplast, EPACs of the world. So there is this whole value chain that you can play on to play these this summer season, and in addition to this, you have those beverages companies, especially Varun beverages, which is normally benefits a lot from a very hot summer.
Okay. Gaurav, we've been meeting after a while. Within Sher Khan, what is the view that is emerging in terms of this correction that we are seeing on mid caps and small caps? Do you think there is still a window where stocks might fall through further? There's a 23% correction on small cap index and about a 20-21% correction on the mid cap index. What is your view?
So, our view is that, the we are not still out of the waters. Okay, probably in case of large caps, Nifty, you would have seen bulk of the price damage now. However, we believe that the small cap, micro cap space, still stocks are, you still see some froth there, and there is a case for a corrective phase there. Having said that, after such a fall that we have seen, there could be some bounces. We are due for a rebound, and that is what the market was trying in case of small caps and mid caps in last 2 days. However, today that has also been this given up again, and this shows the negativity in the market. In fact, the wake up call was in the first week of Feb. You had multiple positive news, budget, rate cut, Delhi election, and still market did not sustain up for even a day for the entire week. So yes, I think we need to focus still on reducing exposure to the speculative momentum part of the market.
Right. Gaurav, what we'll do is we are getting some important news as far as the SEBI chief is concerned. Let me just address that and I'll just come back to you shortly. This, ladies and gentlemen, is about systematic investment plans and the move by the market watchdog to reduce the ticket size. More importantly, there are many changes that have come into this segment, but one important one is on that side of marketing. So micro SIPs that support financial inclusion, but the incentive scheme which is now being forwarded by SEBI registered multiple wealth management raises quite a few concerns. The app, which claims to be backed by Kotak Mahindra Group, offers 2,000 rupees in Swiggy money for starting 7 systematic investment plans of 250 rupees. It also promotes SIPs with brands contributing anywhere between 5 to 20%. Now, is this allowed under SEBI norms? Business Today's senior correspondent Ridhima Bhatnagar was with SBI chairperson Madhavi Puri Puch, and this is what she had to say.
SIPs are a great way for financial inclusion. But we came across an investment advisor registered with SEBI that has been offering a sort of an incentive by the name of Multiple Wealth Management. It says on its app that do 7 SIPs for 250 each and get 2,000 back as Swiggy money. And it also says that start an SIP with a short-term goal of spending with a specific brand, and the brand will invest a part of it on your behalf. So we wanted to understand that is this allowed, and can an RIA promote a product like this?
Whenever a product of this nature is promoted, we have one most important cardinal rule, which is that you cannot give any assurance of return. Okay? So nobody can say that this is how much you will get at the end of this, that and the other. That rule is cardinal. And if you ask us, is that allowed? It is not allowed. Okay? Having said that, promotional schemes of any kind are a matter of marketing, sales, commercial arrangements. We never get into those. So we will never have a point of view on how you are using your incentive. We have a larger protection in place, and I think I mentioned that while I was speaking, that if the SIP is discontinued in less than 2 years, then the incentive is not given to the distributor. So the risk mitigation measures are already well baked, and the reason it's well baked is because the product is created by the industry, so they know exactly what the risks rewards in this ecosystem are. So I think a little bit of healthy skepticism is good, but a good dose of trust in the ecosystem and the industry is also good.
Yeah, Ridhima, welcome to Market Today. Seems that the SEBI chief sidestepped your question. Were you able to speak to her off camera? What did she say?
So Cheryl, she clearly told us that SEBI is not against any promotional activity for promoting micro SIPs, which is a good initiative by the regulator, but it is against any sort of assurance of returns given by this promotion. So she clearly said that this is not allowed, and any sort of promotion for the assurance of returns is not accepted, and it goes against the whole idea of safeguarding the investors. And it is also said that distributors will only get the incentive after 2 years, which is 24 months of SIP by the investor.
Fair point. So in a sense, she hasn't said that this marketing scheme is incorrect, but all that she has said is that you can't be offering confirmed returns or guaranteed returns, and it leaves it to the better judgment of the marketing teams of mutual funds to come to a conclusion. Are we understanding the subject clearly?
Yes, and it has also... Yes, absolutely, Shail. And it has also reiterated that the ecosystem is what investors should trust on, the regulator and the AMCs, which will ensure that the investors are not misled into anything. The whole purpose of it is to make sure that investors are not misguided by any sort of promotional activity.
Okay, thank you so much for this, Ridhima. Let's see what Swiggy Money is. And of course, I'm sure there will be a lock-in as far as these SIPs are concerned for a period of 3.5 years, because the wealth manager, in this case, Multiple Wealth, needs to also make money out of it. But like I said, at least in the view of several other experts that I had spoken to, this is at the moment a gray area. You can't be offering money to someone to start a SIP. Let's see how it is, because this also in some way is a guaranteed return, whether it is in the form of Swiggy Money or a token or whatever, but only time will tell. Let's see how this controversy grows, and I'm sure you'll keep us updated. Thank you so much for your time. Let's get back to the markets. 3:13, ladies and gentlemen, we have Gaurav Dua with us. Gaurav, good to be back with you. Any specific segment in the market that is attracting your attention? I just wanted to bring to our viewers' attention that in this week alone, if you look at the Nifty, there have been many sharp rebounds. If you look at the week-to-date change, which essentially means those stocks where a lot of change has happened for the positive. Let me just highlight a few of them. They are NTPC, up 5%, up 8%. Shriram Housing Finance is up 9% almost. Hindalco is up 8%. Eicher Motors and Coal India and Tata Steel are up between 4 and 6%. So some parts of the market are showing bounces after a very, very sharp correction. Let's get Gaurav's view into it. Gaurav, within the frontline large caps, are you seeing this as a dead cat bounce, which is it just might last this week only? Or do you have hope that 22,800 seems to be a level where the markets will take support at least on the large cap space?
So yes, market has been trying to test 22,700, 800 level practically every day for past almost a week now, and it has been holding on, which I think gives it a lot of strength. So yes, I believe with a stop loss of 22,600, though I'm not a technical analyst, that's what the view of my this thing technical team, that there is a strong case to play the rebound. Now that rebound will happen today, tomorrow, next week is something which I'm not an expert on. But yes, the way markets have been holding this level of 22,700 and 22,800 gives a strong case to play for a rebound from here.
Okay. Even if we see now the Nifty might be down 100 points, but 22,800 is back on the screen. Of course, the closing value of the Nifty or any index in India is the weighted average of last half an hour of trade. We still have about 14-15 minutes left for today's trade to draw to a close. Let us see how markets and the Nifty proceed. A weekly close above 22,800, ladies and gentlemen, will provide strong evidence to the market that this is a level that bulls are very, very keen to defend. Remember, in September 2024, the level of the Nifty was somewhere like 26,270, and from then on we've corrected somewhere like 13-14%. Gaurav, coming back to this discussion on what valuations are and where you see value at this point of time. Within the mid and small cap space, what is the research team of Sharekhan coming up with in terms of quality ideas where prices have corrected substantially, and maybe this could be a time to make a fresh entry, even if it's piecemeal, maybe a small chunk, maybe a sip in an individual stock? What is the view in Sharekhan?
So yes, the problem is, Shell, that most of the retail investor have they invested directly through the brokers or they have invested through mutual fund route, are already have a skewed exposure to a small cap, micro cap. So on an average, I have seen most investors have anywhere between 50 to 80% in small cap, micro cap. So I don't think this is a time to start going and this thing adding to that exposure, given the fact that today the small cap index still trades at around 40% premium to large cap index and around 30% premium to its long-term period average this thing multiple. So we are not trying to push small cap, micro cap stocks at this stage, number one, because we believe that risk reward is better in the large cap space right now, and portfolios of most of the investors are anyway skewed to a small cap, micro cap space.
Okay, fair point. I agree with you on the micro cap weightage that is there. I think a lot of pain points that are there in the market is also because of the fact that many of such companies have collapsed between 50 and 60%. Mainly on account of overvaluation, mainly on account of a very sharp run up in prices. So that is getting corrected. Within the government space, Gaurav, whether it's PSU banks, railway stocks, the defense theme, is there anything that is catching your attention at current levels?
So yes, within that space, I think the valuations are now looking very attractive in the public sector bank space. So most of these stocks which had gone up from around zero point 0.6, 0.5 to zero point 0.6 times price to book to around 1.2, 1.3 times have now come back to zero point 0.8, zero point 0.9 times. So you have large banks like Bank of India, which is available at zero point 0.7 times price to book. And they still don't have any asset quality issues, what we see in case of NBFCs or what we see in case of unsecured books. So they don't have the overhang of NPAs, but their valuations are now looking very attractive. Now, two ways to play this is that you go and start buying the frontline stocks, probably an SBI, BOB, Bank of India, or you buy a basket of stocks, which you can do through a public sector bank ETF.
Fair point. While we are at watching markets, it's almost 3:19. One stock that I'd like to mark today is Mahindra and Mahindra. It's broken past its 200-day moving average on its way down at 26.66. There is extremely heavy volume pressure, and the price that you see was last observed in September. Remember, this has been an outperformer, and the primary reason for this mild sell-off that we are seeing from 3,200 all the way below 2,700 is this talk of Tesla, the electric vehicle maker, US electric vehicle maker, trying to set up a shop in India in terms of selling its high-end cars and trucks. Remember, Mahindra has been one of the leaders in the EV space and one of the very, very few stocks where prices have risen up substantially and backed by very, very strong earnings and top-line growth. But for the moment, it seems that selling pressure is very high. The volume that you see on Mahindra and Mahindra today is somewhere in the vicinity of 87 lakh units. This 87 lakh shares, and this is the highest since 20th of September. So please keep an eye out on Mahindra and Mahindra. Is this an opportunity to buy the stock lower, or is this froth coming out? Is something that Gaurav will have a better answer. M&M for you, Gaurav, what is the house view on this EV maker?
So we have been extremely positive on the stock, and it has been our top pick in the auto space for the reason that they have been able to gather market share in the SUV space, passenger vehicle. They have been able to up their game. Now you are also seeing revival in the rural demand, so the farm equipment will also start doing well. Quarter 3 numbers actually this thing showed a very healthy double-digit kind of a growth in in this thing, tractors. So overall, the story in terms of their new launches, everything looked right. But yes, the recent news flow and the statements made by President Trump that India needs to reduce the import duty on autos or they'll face the reciprocal tariffs is something which is getting the market worried, because this would mean that Tesla vehicles will be available in the Indian market at much lower prices, because right now we have around 115% kind of import duty, which the media reports say that could come down to 15% odd. So if that happens, that means there will be an increased competition in the EV space for both Mahindra and Mahindra as well as Tata Motors, which has also been doing extremely well in the EV space. So that is leading to concerns, and the kind of market we have, any excuse is a trigger to sell. And Mahindra being the outperformer, I think this has triggered some kind of profit taking in the stock. However, we believe that at these levels you can start to accumulate the stock. We believe that valuation wise also, if you are getting this stock around 12 to 14% below the all-time high prices, and we believe that the outlook at least for next 1-2 years will remain very strong, because putting up a new plant and bringing out your vehicles in India will take some time.
Fair point. While we are wrapping up the market, let me just point out to a few counters that are doing extremely well in terms of price and volume. I'd like to mark Godrej Industries. This is the top traded counter today. Very, very heavy volumes of plus 2,500 crores traded on Godrej Industries. And this is the fifth day of a very, very sharp rally. Normally, we don't see this kind of a volume in Godrej Industries. Today has been exceptional, 2,300 crores traded, and of course the counter itself is up 16%. If you look at the previous 5 days, it's added more than 32%. The latest quarterly numbers, which came on 12th of February, show a very, very robust performance. Net profit for the third quarter rose 77% to 312 crores year on year. Sales were up 34% at 4,825. Anything out of the ordinary, Gaurav? You've heard about Godrej Industries. What could be the reason for this very sharp jump?
So the quarter three numbers were good, pretty good, and the outlook also what they gave was quite optimistic. Apart from this, I won't be able to add any value here.
Okay. There is also some news in the market on Godrej Industries in terms of just the performance on the quarterly basis, which both Gaurav and I have highlighted. But there doesn't seem to be any news which categorically tries to explain this 16% rise. Nevertheless, it's right there, and this is how it is. Apart from Godrej Industries, of course, we've discussed M&M. There is profit booking on BSE after a sustained rise during the week, so down 3.5%. In the green, JSW Energy, in the green, CDSL, in terms of top volume traded. Let's look at the week to date changes in NSE 500 and those that are amongst the top gainers. Okay. Godrej we've discussed. GlaxoSmithKline Pharma up 24%. Again, driven by very strong earnings. Bikaji Foods is up 18% in the past 5 trading sessions. You have Archean Chemicals up 14%. NLC India is also up 15%. And of course, you have NetWeb Technologies, Tata Investment Corp, Suven Pharma also coming up with a very strong performance. 326, waiting for markets to sort of bring a weekly close. We are now again below 22,800, but then also thereabouts, 22,786, down 126 points. The IT index is down 300 points. The Nifty Bank down 380. In terms of your strategy for next week, Gaurav, this would also be the last week of the FNO expiry, and again, it will be for the first time the fifth consecutive month that Nifty would be losing ground. What are you looking forward to in terms of next week? Major events? Anything that catches your fancy?
So, I've been told by my technical team that this is after 1996 that you are seeing 5 continuous months of fall, if that happens in this month. So, I mean, that says something about the pressure on the market. And if you see, largely it's driven by the relentless selling by the FIIs. So on that front, only silver lining that we see is that the dollar index is been softening from 109, 110. It's now come down to around 105, and it's close to an important support price. And if that breaks, I think there could be some slowdown or easing out of the selling pressure from the FII, and that could this thing support the markets. Otherwise, I believe that markets might remain under pressure, and bulk of the price damage in the large cap is done. Nifty, you have a risk of 2 to 5%, but on the broader market, small cap, micro cap, we believe that this year of 2025 is going to be extremely tough, and it could be something which we saw in 2018-19.
Okay, fair point. While we are at it, we are sitting on 21st of February, ladies and gentlemen. There are some stunning outperformers in the market over the last 21 days. Let me just highlight a few of them that have come in. Godfrey Phillips, in the month of February alone, is up 27%. The company came out with a stunning set of third quarter numbers. We have Redington at a record high, 251, up 21% in the month of February so far. Castrol India has bounced 20% at 214. You have pharma and hospital stocks such as Medant, up 17% in the month. Suven Pharma, again stunning set of numbers, has added 16%. You have the likes of Jindal Steel and Power, Anand Rathi Wealth, up 10% and 11% respectively. And of course, the likes of Bajaj Finserv, up 8%, Shriram Finance up 7%, Cholamandalam Investment Finance up 7%. So these are quality stocks that have given fairly decent returns in the month so far, and maybe over the next week or so will either face some kind of selling pressure or may end up fairly higher. Within the Nifty, if you look at the month to date performance, the sharp outperformance is seen in Hindalco, up 9%. Bajaj Finserv I have marked already, 8% higher. Bajaj Finance, Shriram Finance up 7 and 6% respectively. Tata Steel, JSW Steel and private banks Kotak and Axis up about 1 and 3% respectively. So nothing much to talk about within the Nifty as far as the month to date is concerned. But again, it's tremendous outperformance at a time when the overall market and the index itself has shed dramatically. With that, ladies and gentlemen, let's thank Gaurav. Thank you so much, Mr. Dua, for your company and wonderful views that you've shared with our viewers. Have a nice evening. And with that, we'll also draw to a close on the markets. The Nifty, ladies and gentlemen, at 22,763. So 22,800 seems to have given up. Let us see how the close happens after 10 minutes. But it's a day which went in favor of the bears as also the week. 117 down on the Nifty. We have the close, it's 22,795. So just a shade below 22,800. But again, that holds. Thank you for watching us. Have a nice evening and a nice weekend. Next week, we'll be back with the top that's there in the markets. Thank you.
Thank you so much, Radhika. Thank you so much, everyone, for being with us here this afternoon. We've already had a kickstart on a bright and positive note. Let's hope to take this forward. Thank you so much, Mr. Khara, for sharing all those wonderful insights on the banking system. And we are going to be talking about the new age